Hello traders, Gary Wagner here, 1140 in Honolulu, 540 in New York on Thursday, 5th day of October, 2023, and this is the Daily Report for Gold and Silver. Even with a moderate decline in the dollar itself and yields moving lower in 10, 20, and 30-year U.S. bonds, gold continues to fall, currently down $3 and fixed at $1,831.80. Unquestionably, gold continues to decline, moving deeper and deeper into an oversold scenario. The MACD continues to trade lower, with the MACD line now in negative territory. Although the declines are diminishing, in other words, the differential between the open and closing price, they are certainly down to small numbers, such as today, a decline of $3. We are nearing the area that we believe could be an area of technical support, $1,815, based upon this double bottom that occurred in February and March of this year at that price point. The other thing that we have spoken about recently is how we have seen a convergence between the short-term 50-day moving average and the 200-day moving average. They have not officially crossed, but that cross, I believe, is imminent, as the differential between the 50 and 200 day is almost nil. We are now in the 9th consecutive day of declines. And as I talk about in our opening letter, it's interesting when you have both Eastern technical studies and Western technical studies or indicators alluding to the same scenario and having the same interpretation. The number 9 by Tom DeMark is part of his sequential series of market timing, and there is a candlestick pattern simply called an 8 to 10 new price high or low. The key difference between those two patterns is in the Japanese candlestick pattern, they don't have to be consecutive, and in the DeMark 9, they do have to be sequential and consecutive. Nonetheless, we see that this decline looks as though it's running out of steam, and we are getting near the target we identified a couple of weeks ago. Another interesting aspect of the decline in gold and what we're seeing today is 3 days ago in the dollar index, this is a daily candlestick chart, we identified a doji, which can represent simple consolidation as we see here, or a pivot, as you can see down in this key reversal area when the dollar hit a low of 99 and then began to move up. It now has been followed by 2 red candles with lower lows and lower highs than the doji itself. That could be significant. On a technical basis, the first level of support would not come in till about 105.18. We're at 106.06. Many analysts and market technicians, including myself, have looked at the fact that we have seen dollar strength and higher yields in U.S. Treasuries being a great contributor to the demise in gold pricing. We just talked about the dollar coming down, but when you look at the 10-year bond, the 30-year bond, as well as the 20-year bond, they have come off these highs recently. As I said, the jobs report could be a major influence and help create a pivot from bearish to bullish in gold. Silver also continues to decline, having a strong decline from just above $25, $25.35, to its current price just above $21 per ounce. It has broken below the 78.6% fib retracement. And if we do see gold find tentative support and begin to reverse, I would look for silver to move back above $21.35. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.